Hello and welcome to On the Couch with Steve, a podcast where we help you navigate the often complex world of buying and selling real estate here in Ipswich. I'm Steve Athanates. I'm the owner of NG Real Estate Ipswich. I'm joined today by a great fan, a great fan. He's a fan, but a great friend of the show, and he's joining us remotely today. That's what really screwed me up. It's because we're not even in the same room. Steve's away on holidays, enjoying himself, but he's been kind enough to pop in for the RBA announcement on interest rates. Hello, Steve.
Hey, Steve, how's it going?
I'm excellent, mate. Not as good as you. You're obviously on holidays.
Now, I got a little bit more colour in my skin at the moment. I've had a little bit more sun. So school holidays, my daughter's 13th birthday, so been celebrating that. So, but back in the office tomorrow. So all good things.
No worries, mate. Well, look, again, thank you so much for joining us today. Now, the reason we're obviously having a chat and obviously another episode of On the Couch with Steve, RBA announcement today. Mate, we predicted some things. What actually happened?
So again, both of us are correct. So we both predicted that they would be on hold or pause, and
Yes.
and they were again on pause. So the cash rate does remain still at that 4.35%, and it has been on pause now 7 times in a row. So
Now, obviously, that's despite the fact that the US dropped their interest rates for the first time in a long time, and they dropped by half a basis point.
They did. Now, I guess that was quite topical in the press conference after the RBA announcement, whereas Michelle sort of defended herself. Why has Australia not dropped rates? We've seen, US, we've seen Canada, we've seen New Zealand, we've seen China. Pretty much all the central banks around the world have dropped rates. But the biggest thing that probably to remind everybody of is that our cash rate is still one of the lowest. So everybody else actually lifted rates much higher to, I guess, stem inflation much quicker in different countries. And every country is ultimately different with their economies as well. But again, we are still actually one of the lower interest rates around. So unfortunately, I would love for multiple or a 0.5% rate cut.
Yes.
100% make my job a lot easier.
Yeah, everyone would.
But yeah, I guess putting it on hold. So I guess inflation in Australia went from 3.5 down to 3.4%, so a 0.1% reduction. So we are heading definitely in the right direction. A lot of the actual data actually gets released tomorrow. So it'll be interesting to see some of the actual, I guess, the September data that comes out tomorrow for their next RBA announcement, which they don't meet in October, so it won't be till November now before the next meet. Whereas actually a few economists are actually predicting that the actual inflationary data might actually show us starting with a 2. So they're all sort of thinking 2.7, 2.8. So we're actually anticipating a massive drop, which is why all the economists and everybody going, we should see rate cuts, but without the actual data coming through, Michelle Bullock has to rely on actual factual data, not hypothetical data that may come into effect.
All right. So I guess in that vein, mate, what was the commentary from our RBA governor? What was she really saying was, I guess, the causal effects of why we're not getting a rate cut?
Again, unemployment is still relatively low in Australia, and that was the main reason why the RBA, the Federal Reserve, so the USA, dropped their rates so low, is their unemployment went through the roof. So that cause and effect there was they need to drop interest rates to give more relief in regards to consumer spending. We've seen discretionary spending get to one of the lowest points it's been for a long time here in Australia as well. One thing that she didn't talk about, but it's quite topical along a lot of the banks, is actually savings. So people, when they get paid their money, generally speaking, most people save about 5% of their wage in savings, whether they put it into a savings account or an offset or a redraw. Through COVID, we actually saw savings rate at like 21%. For last month, it was sat at 0.6, so 0.6%. So essentially, people are spending every single red cent that they have. So, with that discretionary side of things, I think, statistics are just going to show that people aren't spending money, which means unemployment's potentially going to start going up again, because if people don't spend, employment has to be, people have to lose jobs to essentially slow down the economy at the same time. So our supply and demand is still relatively even, which is why we're not seeing that unemployment rate go up.
So when you're saying that people aren't saving anything and they're basically spending everything they get, concerning in some ways, is that got to do with cost of living pressures and the fact that people, they're just spending all of their income basically to survive?
Yeah, pretty much. So, and a lot of people are spending, I guess, outside their means. So, if you got paid to say $1,000 per week, you might have 20 grand in savings, but your actual outgoings are $1,100 per week. So you're actually negative savings, as where there are some people still actually saving money. And we've seen a little bit of this where, as your outgoings outweigh your ingoings. So one benefit that we've seen, I guess, as a mortgage broker is we've been doing a lot of, because the property prices are still going up, particularly here in Queensland. They're not slowing down, and with I guess the hope, I was about to say threat, but the hope of interest rates going down very soon. Essentially, it's only going to continue to push property prices back up even more, because people can borrow more. And that's part of having high interest rates, is that it reduces people's borrowing capacity. Once rates start going back down, borrowing capacity goes up. And being that a lot of people have got a lot of equity in their properties, we're still seeing a lot of debt consolidation. So, hey, I bought my house for 600, it's now worth 800. 3 years later, I've made 200 grand. I might pull 60,000 of that. I've paid out my credit card, I've paid out my personal loan, I've paid out my HEX debt, which then frees up more serviceable money. So you can actually start borrow money to save money. But ultimately, if you can put it on a home loan at 6.2% versus paying 13% on a personal loan or 20% on a credit card, you can ultimately start paying back your home loan at a much faster rate as well.
I agree. All right. Well, I guess as we predicted, interest rates are on hold. You've mentioned that the Reserve Bank now doesn't meet again until November. Obviously, it's become a bit of a political hot potato right now, where both parties are trying to jockey the Reserve Bank and talk about changing their powers and potentially even, enforcing some legislative requirement that they can make the Reserve Bank reduce interest rates. Mate, where are we going with this? Initially, it was maybe rate cuts in February. We meet again in November. Do we get a rate cut in November if there's enough political pressure? Everyone at home wants to know, when do we get relief?
I guess from the major banks, which is what we talk to every day. So ANZ have predicted February, which has essentially been my prediction, I think, for about 4 or 5 months now. CBA actually sort of said that they were anticipating in November. They've actually pushed theirs to December. So they're saying this side of I guess this in this financial year. NAB, I think, are a bit way off. They've said the RBA is saying that they're not dropping rates anytime soon. It's going to be at least 6 months. So they're predicting May next year, which is quite a far away.
Yeah.
And Westpac's predicting March. When you look at it, I guess February and March is when they meet. They don't meet in April. So when we start saying May, they're saying, not in the first quarter, where they're saying essentially second quarter, but that's a long time away. Again, every economist, every bank, everybody's talking about not about when rate cuts are coming. Not if rate cuts are coming, when rate cuts are coming. So I'm still firm believe, I think February. I think they'll sit on their hands in November and December and sort of see what happens for this financial year, when they can make an informed decision in February. And potentially we might even, if they do hold out, then we may even see a 0.5% rate cut like the USA.
Okay, well, interesting. Obviously, we know they don't meet until November. Then we've got Christmas, when obviously spending naturally increases because of obviously Christmas. So I think potentially you're right. I did see a report from the ASX where they're predicting that we may get 4, maybe even 5 rate cuts next year. Did you see that one?
Yep, I 100% agree. I think they keep talking about maintaining this inflation to be between 2 and 3%, where they're not anticipating it going to be, I guess, stable until 2026. But ultimately, I'm going to say the damage is done. We're in a declining or in deflation at the moment. So inflation is going down, which is exactly what they want. But the thing is the Australian economy is still quite strong. So that's why we're sort of sitting at a plateau, and that's why they keep pausing, because we're not seeing much volatility going massive spikes or reductions like you've seen in a couple of the other countries around the world.
Okay. Well, look, obviously, all incredibly interesting. We could talk about this literally for hours as to what might, could, may happen. I guess it's prediction time. Next meeting of the RBA is in November 2024. Mate, what's your prediction?
I would love to say a cut, but I honestly, I don't think the government's going to have enough pressure. I think it's a lot of political play with the election on the rise. So
When is
I
the
still think that,
election?
of course.
When is the election? I never really pay attention,
I know there's a
truthfully.
state election going on because they're everywhere in my suburb at the moment. You drive down and there's
Yes.
people waving at you with all the.
Yeah,
So
waving to you.
I'm going to be honest.
Hi, can you wait?
I've
Can you vote for us?
kind of been a little bit out of it. On holidays, man. I turned my brain off. I've just been kids playing dogs, throwing balls. So I'm not exactly familiar exactly when the next date is. I always do postal votes, so
Yeah,
it's
me too.
one thing that I don't have to go in.
All right, mate. Well, we've got your prediction. You're saying November rates are on hold.
Yep.
I'll give you my prediction. Honestly, I'm the same as you. I really wish that we could get a cut in November and really give people some assistance, particularly bearing in mind what we've just said. Our savings are at, record lows, and some people are not saving anything. They're actually overspending. But when we see the percentage is only 0.606% of that's really quite alarming. So what that means is people are really suffering, and it's taking all of their income for them to survive. I'd love to say we're going to get a rate cut. I'm the same as you. I think the government won't be able to exert enough pressure, despite what they'll say in the media. I think the Reserve Bank will act independently as they should, and we will see rates on hold again in November. We'll see what the data comes out in November, and then it'll be whether we can get one in December or we have to wait until February next year, but we'll see what happens. But guys, you've heard it here first on the couch with Steve. Today is RBA announcement day. Steve Beach from Stanford Financial. Obviously, we're in agreement for November. Rates are on hold again. We will see what happens from there. So, mate, thank you so much. As we mentioned, you're doing this remotely. You've popped in from your holidays. So thank you, Steve, and Stanford Financial for letting you be part of our podcast once again. Mate, thank you. Now, guys, for everyone else out there, obviously, we really value your feedback. If you've got any questions, if you've got any comments about what we've discussed here today, please click the link below. We'd love to hear from you. Once again, I'm Steve Athanates. I'm the owner of NG Real Estate in Ipswich. Look forward to seeing you next episode of On the Couch with Steve.